Okay, hi folks. So we are going to do a quick recap on the number two asset in crypto, Ethereum, after receiving a few community requests uh, to discuss it after a pretty big, uh, one of the top three largest correction days we've had in 2023. So this was a pretty sizable retrace for a lot of assets, as we can see here, just looking at the 24-hour price returns. You can see Bitcoin down 4.4%, Ethereum down 3.2%, and then it only gets worse as we start going down the altcoin chain here. Um, it appears that the news relating to the SEC suing Binance is having a dramatic effect, as you would expect. Obviously, Binance being the largest crypto exchange in the world by volume and essentially any other metric you look at, there's going to be some waves. And obviously, we can debate this on another call, but the likelihood of a rebound is likely going to uh, be based on how much of a rumor versus actuality this lawsuit actually is. Oftentimes we hear about a lawsuit, uh, and a few days later, nothing happens. We saw it with BUSD. We saw it with XRP for a while, which is still going on. Even USDC, they've they've all been in some pretty serious hot water over the past 6 months here, and uh, all of those three assets are still standing. And this is more of a market-wide uh, threat on crypto, as a lot of people naturally are going to pull their money off of Binance as a result. But we'll save that discussion for another time. What I want to look at today is Ethereum, and one of the big reasons why is it was actually one of the best performing assets, if you can say that on a big red day. It only dropped about 3.2%, while the average, looking at most of the market caps in crypto, there was an average drop of about 6.5%, about twice what Ethereum dropped. And obviously, as you would expect, this is normally the case when it comes to Bitcoin and Ethereum. When there's a big market drop, they tend to not be impacted quite as much. And if you want to look at it this way, think about how many exchanges list Bitcoin and Ethereum. What percentage of them out there? Arbitrarily, without knowing the number offhand, I can say 95% of exchanges that have assets on them likely have Bitcoin and Ethereum as trading pairs. However, you know, much less of them, much less than 95%, have something like the Sandbox or Render token or Conflux or something like that. But Binance has assets like these, and obviously, assets that are exclusive to Binance are going to be hit the hardest. Assets that Binance and some other exchanges have, they'll be hit hard as well, but not quite as hard as Bitcoin and Ethereum. So that's kind of the logic behind, if there's an exchange related drop, how big of an impact does that asset's volume hit if it suddenly goes to zero or slows down significantly? In Bitcoin and Ethereum, there are plenty of other exchanges out there that can essentially run as backups, just in the case of this lawsuit actually impacting Binance's ability to offer trading pairs for Bitcoin and Ethereum down the road. Who knows? But anyways, now that we've discussed the price changes, we can also take a look at how social volume is up across the board. Ethereum here is up 21% compared to the day before, and you would expect that on a news day like we just had, there's going to be a dramatic rise in the amount of discussions, especially when we just had a Sunday, which is one of the least discussed days of the week. It's when a lot of people are actually not trading and volume tends to be at a week low. So with that said, let's take a look at some of the charts here to check out what's going on with the on-chain and social scenario with Ethereum right now. For starters, we can see that Ethereum's transaction volume just hit about a 3-month high. It was last this high on March 15th, March 14th. So as you would expect, everything has spiked. You can see trading volume here is a minor spike. I wouldn't say it's significant, and there have been many assets that had much more significant trading volume spikes than Ethereum. So it's almost like Ethereum is doing better due to its lack of attention, while altcoins like ApeCoin, for example, is one that got crushed today. They're getting impacted a lot more uh, due to being much more volatile assets. So this is one of the advantages to having Ethereum in your portfolio. Also, take a look at circulation. We see that the amount of unique tokens being moved, this is also about a 3-month high, what we just saw today, with circulation exceeding 1.73 million tokens, unique tokens being moved. So this isn't counting wash trading, assets moving back and forth within the same address at the same time. It's 1.73 million individual tokens that have been moved. So that's actually a good thing. Typically, when there is a lot of volatility and reason for the community to start moving assets, whether it's a good or bad reason, higher circulation is implying that there's higher utility. And if this continues, it's a positive trend that would create a bullish divergence on the on-chain end. Daily active addresses, if it were to be matching circulation, that would be even better, but alas, it's not. That being said, it is still seeing a slow rise. If I just take off circulation here for a moment, you can clearly see that the daily active addresses are moving in the right direction. Whether it continues, we'll find out, but rising address activity is always a good thing. Another thing to keep in mind is the average trading returns of Ethereum right now via our MVRV metric, and it's showing mixed results at the moment. On the 30-day scale, Ethereum is actually below 0%, with the average trader who's been active in the last 30 days being down about 1.5%, very modest, almost dead even. However, the long-term traders are up about 15.4%, indicating that there still could be some slight overvaluation going on. And then we even have the Z-score, which is a very interesting metric because it kind of combines the short, mid, and long term and looks at the realized cap versus the market cap. And right now, the realized cap is actually still a bit above where the market cap is, meaning we have to temper our expectations a little bit of an imminent rise in Ethereum. That said, it's pretty neutral, right? This is not a high MVRV Z-score by any means. So there could easily be a little bit of a bump if prices start to recover market-wide. And I wouldn't be surprised to see Ethereum at least making a run back at 1900 again, assuming that this Binance news is not, devastating for everyone. We'll skip funding rates. I can just tell you that there isn't really much going on here. I lied, I'm not skipping it, but you can see that, looking at Binance, it's pretty neutral. DYDX, it's neutral. And then Deribit, you do see a little bit of a long spike, but it's not much. So it looks like there is a little bit of a tendency or skew toward people buying this dip with the expectation of Ethereum rising back up. But it's difficult to say whether that'll happen or not. Whales do seem to have ticked up a tiny bit. I wouldn't call this very significant, though. The amount of $1 million or more transactions yesterday was at 675, which was its highest level in about almost 3 weeks or so. We can also see the 100K or more, also about 3 weeks since we last saw, actually almost 4 weeks. So yeah, a little bit of a spike, but not quite where it was really volatile back here in March, right before the entire crypto market kind of took off. Number of addresses could be interesting as well. You can see that the sharks and whales here aren't doing much. I would put a little bit of attention on this yellow line, the 1,000 to 10,000 tier. They're just today, or over the last 2 days, I should say, we had a rise of about 30 36 more addresses in this tier, and it was alongside a big rise in the 10,000, 100,000. So these are two legitimate whale tiers that are showing just a tiny bit of a rise. It could be nothing, but it could be significant. You can see how much these lines have kind of dropped down as whales have kind of uh, dispersed into smaller addresses. It could mean a lot of things when it comes to Ethereum because DeFi has a lot to do with it, self-custody, several different wallets with self-custody. So it is at least encouraging on the surface to see that the two large whale addresses are increasing in number at the moment. And if we want to look at this really quickly by percentage held, yeah, it's not really looking too much different. So this is the overall supply held by each tier. And you can see that the blue and yellow one, if you were to combine those two with 12% of the yellow line and almost 23% in the blue line, you're looking at almost 35% here. Still, though, very, very low compared to where it was 6 months ago. So that's a long-term concern we have to be aware of. Ratio of on-chain transaction volume and profit to loss. This is always an interesting metric. On a day-to-day basis, it doesn't look like there is anything significant. In fact, I'd even argue that this spike was kind of a top signal, and price indeed kind of topped out right where that candle hit. And after a couple days, obviously this correction happened due to a lot of news, but it was already starting to correct even on Sunday before this news broke. So I'd say that this was a pretty reliable indicator. And now there's a whole lot of lost transactions, as you would expect, because the price has corrected a tiny bit. Not really a big correction, though. So perhaps a lot of people are just getting out of Ethereum because it hasn't corrected as much as other assets. And people may think that Ethereum's bigger drop is yet to come. And that's a good sign. You know, when you see these low spikes right here, it's a sign of capitulation, and it generally leads to bottoms, especially the really low ones. As we can see here, that was exactly when the price bottomed out and went on a huge run from March 10th all the way until about April 18th or so. Even this mini one, look at how it created a little price bottom right there. So, you know, watch to see if this ratio stays really low. That would be a good sign overall for Ethereum. Weak hands dropping out. Also, take a look at this tiny little divot that happened in the mean dollar invested age line. This isn't a huge drop by any means, but generally you want to see dormant assets being moved as a signal that that prices could potentially go on a bull run down the road. And this likely was due to some panic selling going on after hearing the news today. But if it starts to drop down, if we see like a continued line sort of like this one that happened in April, that would be a good sign that older stagnant coins are starting to be moved around quite a bit. And this is interesting as well. We see this huge realized profit spike that happened roughly 8 hours ago from the time of this recording. And it's actually the largest realized profit spike that we've seen in the past 6 months. It could be nothing, but you know, we have to be a little weary of that because the last time we had a realized profit spike about that size was here on April 18th. And it was right before, it was the precursor to that big drop that happened over the next week. So that would be a bit of a bearish signal there. On the more positive long-term side, take a look at this, guys. The supply in exchanges just continues to plummet, and there's less and less coins on exchanges to be sold. So you talk about Ethereum holding up against the rest of the markets. It could be argued that part of the reason why Ethereum did not have quite the violent drop is because there's simply less coins on exchanges to sell off. So there weren't as many coins theoretically on Binance for people to panic sell and jump out of Binance with. And if we zoom out here, let's go all the way back to the inception of Ethereum. back in 2015, notice how the supply and exchanges has exceeded this little divot that we saw back in May 2018. And we're now at the lowest supply, below 9.7%, since Genesis, since Ethereum was first publicly introduced. And that's pretty promising. We like to see less and less coins sitting on exchanges. Now, if we saw no coins on exchanges, it would be pretty hard for coins to circulate and up the utility of the asset. But overall, keeping it low and a healthy level is generally a good thing. Also, take note of the social volume and social dominance. You'll notice it looks pretty ordinary for Ethereum. Obviously, as I mentioned at the beginning of this video, social volume has been up across the board for a lot of crypto assets. So yeah, Ethereum made a 3-month high in social volume, but its dominance, if I color this, let's put it as an area so it's easier to see. Notice how it's kind of middle of the road. It's not really being discussed at a high level, and that's not a bad thing at all. If anything, you know, a super low social volume would mean that people just aren't interested at all, and a super high one would mean that people might be causing a price top, as we saw back here on April 13th, when the mainstream tends to get too interested in one asset. They tend to cause a top because it's generally caused by a lot of FOMO. And weighted sentiment is pretty much a flat at the moment because it's not really getting, Ethereum isn't getting considerable discussion, just as we explored right here. So weighted sentiment is about neutral. It's interesting, we saw this big negative stretch where a lot of people were quite bearish toward Ethereum, and it didn't really make a dent. Oftentimes this will cause an asset to rise, but in the case of Ethereum, I wouldn't call weighted sentiment the most valuable for the very, very large assets. Maybe Bitcoin is an exception, but weighted sentiment I like for smaller altcoins a lot because it'll point to when the mainstream is suddenly getting really bullish or really bearish, and generally the opposite price action will occur. And then last but not least, we have development activity, which looks pretty neutral at the moment. Ethereum is a top 10 developed asset in terms of notable GitHub activity, and that has been the case for the large part of the last at least 3 years or so. So that is an encouraging sign for you long-term Ethereum hodlers out there. And then one last thing I want to show is Ethereum's NVT chart, which shows the amount of unique token circulation compared to its market cap at any given time. And right now, we're on our 5th straight month at a bearish signal, and that is indicative of not quite seeing enough circulation on the network to justify that a price rise can occur. So overall, you know, the take is kind of mixed. It looks like Ethereum has good reason to hold up well and continue to do so against the rest of the markets. But on-chain wise, I don't see anything that is showing that there could be a huge breakout. You know, I like that there's at least some small signs of sharks and whales accumulating over this dip that's gone on just in the past 48 hours. But this is kind of a wait and see situation. And if you are holding Ethereum, I would not argue against doing nothing right now, right? Just letting the dust settle a bit and then starting to make decisions as Ethereum deviates from the rest of the markets a little bit. For now, it looks like things are going surprisingly well for Ethereum in relation to the rest of the markets, so you have to be satisfied with that. So with all that said, thanks for watching, guys, if you made it this far, and I'm looking forward to answering questions about any assets you may request on Friday. So make sure to tune in on Friday at 2 p.m. UTC to discuss anything you'd like to. Talk to you soon.